one of the biggest pivotal moments was 2019, January to August. I had this really long internship. It was with a defense contractor. And if you're a software engineer, like there's really not more of a boring space to be a software engineer than to work for a defense contractor. So I was just sitting there in my cubicle every day and I was like, I hate this. So that's when I started the Beyond the PDT podcast with my roommate at the time, Bryce Toohey. I was like, I need to talk to these people somehow. And I can't just hit them up and be like, yo, talk to me, take your time. We talked to like all the Sykes had like a huge wave of millionaire traders. And like, we talked to them all in like 2019 when they were like really low six figures, like right around $100,000. There was Dom, Jack, Kyle. And that was another huge pivotal moment because then those guys I was like idolizing, I was like, man, they're like real people.
Welcome back to the SteadyTrade podcast, everyone. I am Tim Bohen back here with Kim and Steven, and we've got a guest that one of those young guys and girls. There's a lot of them out there, young people, I should say. I don't want to. I've been on the verge of getting canceled the last couple weeks. So young people, young humans, as we may say, that truly inspire me with their work ethic, their devotion. Again, Matt's another one of those young people, young men that, started out doing a podcast, started out learning trading. Most of you are probably familiar with Matt, but I met him, I want to say 3 years ago-ish when he asked me to appear on the Beyond the PDT podcast. And I look back then and I just remember, I was so impressed with his and Bryce's mindset. Here they are in college, they're trading, they're writing, they're podcasting. That's that kind of, and listen, I don't care what you're doing. If you're doing that kind of stuff, I talk about the Gary V model, here's Gary V, multimillionaire. He's out yard sailing on the weekends and selling baseball cards, but that mindset, and great book, by the way. I still remember Gary V's book from a few years ago was one of the things that really got me thinking about going, selling my business and doing something else. But that being said, Matt Monaco here today. Again, I'm guessing a lot of you might be familiar. He's been doing the Twist podcast for, I think over a year now-ish. And, going to get caught up with Matt. I don't think we've ever actually had him on the SteadyTrade podcast. So get caught up with Matt, and then he's got some interesting stuff to talk about going into 2021. Speaking of projects and always looking to do new things and learn and explore. So welcome back, or welcome aboard, Matt. I think it's the first time on the Degenerate podcast with Kim, Steven, and Tim.
I was on it with Bryce, but this is my first solo episode. It was like 103, I think, but yeah, first solo time on here. So,
I got a lot of brain damage, a lot of head injuries. It happens.
You got to pop more of your alpha brain. I think that's the problem. Like
I actually
popping those things, man.
Got it right there.
Yeah, is there a limit on how many you can take? Or
I haven't pushed it yet, but I've come close. So I once think I saw Jesus with butterfly wings when I took like 12 of them, but I don't know. That's neither here nor there. So
good to have you here, Matt.
There you go.
Really good.
Thank you. Absolutely.
Just one thing from me. Matt Monaco is one of the I don't want to say one of the original few, but one of the original few for me, one of the first that could like turn real profit long to the long side. I remember Roland Wolf came out of the blocks and I was like, wow, you can make money long on penny stocks. But then Matthew Monaco also followed, and then many came after that. Obviously Bowen, Sykes were before that, but then Bryce Toohey followed that. Dan Irish followed that. So you followed a new wave of all of these people who are making money long in the markets.
Mm-hmm. Yeah, no. So, I mean, you mentioned Roland Wolf originally, like that was basically the inspiration. I started, I joined the Tim Challenge, and that was like roughly 2017 time. And 2017 was when we had the original Bitcoin madness. And it was just a really hot market basically for the entire year. And that's when Roland took off. I want to say it's over like $4,000, really small account. by the end of the year, he was like 400,000. I was like, wow, like that's crazy. That's impressive. And it was just like really inspirational for me because at that time, there wasn't many other examples. There was like Steven Dux, but he was like shorting with huge size, and Gertani was shorting, and they had just much larger accounts. And it just like it works. I'm not saying it doesn't work. It's just for someone with a small account, it's a lot
and
more
I think
difficult.
And I think it probably helps because you were there kind of seeing it a little more real time too, right?
Yeah.
You were kind of watching it happen with Roland in essence.
Yeah. I mean, I went through, I was super new, so I didn't know much about the market in 2017, but I remember going through all his trades and like just trying to figure out why he was getting in these stocks, which is crazy because now I trade like 15 feet away from Roland down here in Austin in our office, which is just, it's pretty crazy. Just everything that's happened over the last like 3-4 years.
That's all because of work ethic though. I mean, again, and not to derail us. I'm the king of derailing us, but to everyone out there listening, again, whether it's stocks or whatever it is, I don't care what it is. If you show up every day, you put in the work, if you love what you do and you grind and you grind and you grind, and I'll say it a million times in this podcast, I've been working with Matt, again, closely for 3 years now. And it's like always on his A game. If it text, it's like an instant reply, and it's like and no excuses, no nothing. It's like, yep, let's get it done. And there's your lesson for the entire podcast. Do that. And then all of a sudden you're telling stories like Matt, where you're like, I can't believe now I've relocated a couple times. I'm living the dream. I'm doing all these things. I'm meeting all these people, and hard work pays off, man, at the end of the day. So
I agree. I think that's a great lesson. And what I tell a lot of people is ask me like, I'm struggling, the usual thing after like 6 months to a year. I'm like, you got to stick with it. And I think that's why so many people fail, because you can get it in the first year, but it's such a rarity. Like, you're really not going to get it. It's going to take you a couple of years to figure it out. And also like you're at the mercy of the market. Like, I'm not blind to the fact that the market was just insane for the last year, but because like you said, I was working hard for like 3 years. When that market came, I was prepared at least a lot more than like other people who were just, goofing off and not studying and not looking at the market. So I was able to take advantage of it. And now that's slowed down, like I'm trading a lot less and just taking it easy. But it really does all come back to that hard like work ethic. You really got to put in the hours. It's really the only.
Matthew,
sorry, Kim, but I mean, there's a million quotes. It's like, you gotta put in that time, and then you're ready for 2021. Where if you're just screwing around, there's not much going on, and then all of a sudden 2020 happens. Now you're not ready. I mean, but that whole preparation. I mean, there's a million quotes, but go ahead, Kim. Sorry.
Yeah, just curious, Matthew. If you look back over the last couple of years, were there pivotal moments that happened where you made certain choices that put you on this trajectory?
Yeah, I think so. Going back to 2017, I was a freshman year. I was in my freshman year in college. I was studying software engineering, which I liked. Like, I'm writing this chapter for one of Tim Sykes' books right now, and I was trying to like explain it. Like, I always just wanted to basically be rich. And at the time, like, I thought software engineering was a great route to go. It's a great career. I mean, there's still a ton of opportunity in it, especially if you start your own company. So that's why I studied software engineering for the most part. Yeah. But when I was studying it, I was like, man, this like kind of sucks. Like, I don't really like it. Like, I was decent at it, but it just
listen. Software engineering is an incredible way to get rich if you want to build a conglomerate evil empire, stealing people's private information, pitting women, men, family members, friends against each other, and tearing apart the entire fabric of the country. Then hey, start another Facebook, man. It's a great idea.
Just be a trader.
The money's great.
Or be a trader and take from people who don't have money.
Exactly, valid point.
No, we're against the hedge funds. Let's not forget that. We're against the hedge funds. We're not against the people.
You completely invalidated my point, Steve.
Anyways, but yeah, so like 2017, I was just like not like, I guess, happy. It was okay, but again, I just wasn't passionate about it. So that's originally why I got into the market. And I had an interest in that for several years, dating back to like high school, when I took like Wall Street classes, and I just was always interested in it.
Yeah.
So that was one pivotal moment for sure, just taking the jump. From there, there was like a solid 2.5 year period. Like I like lost money, barely made money. And during that period, like it sucks. Like for 2.5 years, not making money, like there's no way around it. It's not fun. Like, but I was passionate about the market, and I saw people like Roland Wolf coming up and all those guys just like crushing it. And I was like, man, like if they can do it, like why can't I? So I stuck with it. And then one of the biggest pivotal moments was 2019, January to August. I had this really long internship, which was just like part of my curriculum to graduate. I needed like a full year, and I think I busted out like 8 or 9 months of it right there. It was with a defense contractor. And if you're a software engineer, like there's really not more of a boring space to be a software engineer than to work for a defense contractor. Like it's not Silicon Valley. It's really boring. And so I was just sitting there in my cubicle every day, and I was like, I hate this. Like this really does suck. And that was when I was like, I really don't want to be a software engineer.
On the light side, did you help overthrow any like third world governments or anything like that, or not? Any good CIA operations or anything like that?
It was for like, we were like redesigning like Australia's like communication system or something. So it wasn't even for like the United States. It was like a contracted out. So it was super boring. And it was with radios. And I was like, man, this just like, it's just boring. Like I can't do this forever. So that's when I started the Beyond the PDT podcast with my roommate at the time, Bryce Toohey, who I think you had on like last week or something.
Yes, we did.
But that's when I started it, because I was like, I need to talk to these people somehow, and I can't just hit them up and be like, yo, talk to me, take your time. So we devised a plan to make the podcast. And it's still up on YouTube. I don't think it's anywhere else, but you can still see the episodes. There's no video. It's really just audio. But we talked to like all the Sykes had like a huge wave of millionaire traders. And like, we talked to them all in like 2019 when they were like really low 6 figures, like right around $100,000. There was Dom, Jack, Kyle, Bone was on it. Like we talked to a ton of these guys. And that was another huge pivotal moment, because then those guys I was like idolizing, I was like, man, they're like real people. They're like real traders. And because they came on the podcast, I developed like good friendships with a lot of them, like Jack and Kyle and Dom specifically. Like we talked pretty much every day following them coming onto the podcast, and like kind of just injecting myself into that friendship is really like what helped me then over the next like 6 months get out of my hole a little bit. And then like September 2019, because I was then profitable at the time, plus the money I saved for my internship, I crossed PDT. And that was a huge moment, because for the first like 3 years I was involved in this, I was below the PDT rule, which again, just sucks. Like there's no way around it. Like the lessons I learned were great, and I'm not like, I don't regret it, but when you're under the PDT rule, it sucks. Like it just does. So that was 2019. And then September 2019, I passed the PDT and went to the Investor and Trader Summit down in Orlando, which is Sykes' conference, which hopefully we can have one this year, you know, permitting any regulations or whatever. But that was huge for me. I went down, I stayed with Jack, Kyle, and Dom. We got an Airbnb together. Wow. And I met Bohen, which got me involved more with just the SteadyTrade podcast. I ended up actually writing, like ghostwriting sometimes for some blogs, the StocksToTrade blog and stuff. And for me, like, it was just injecting myself in that environment and moving away from software engineering, because I was like, man, I don't want to do this, but I wasn't profitable enough at the time. This was my senior year of college, and I had $25,000. You can't live off that. I mean, I could move in with my parents, but like, it's just not enough money to live on. But then into 2019 and 2020 is when the market like really started heated up. We had all those COVID runners. We had sector after sector. We had stimulus. Everything went to the moon. And I rode basically the momentum like the whole time. There were some pivotal moments. It was up and down. It slowed down a little bit in the summer, like it always does. But then, you know, it started 2021, specifically in the OTC market. That's when the OTCs just went like absolutely bananas. And then turned February, like I think my best month was like or my best week was definitely the peak of the market in February 2021. The second week I made, I don't know, like $430,000 that week. It was madness. But from there, like immediately I noticed a change. Like as I was selling a lot of these positions, I was like, the market is shifting. And like, since I've been in the game for like going on 4 years now, like I've seen like traders come and go. And one of my goals was just like, yeah, I had an awesome run. But it is very easy to give back a lot of these gains. I didn't want to be that one hit wonder. So immediately like wired out like 80-90% of my funds. My trading accounts are currently at like levels that like I had in like fall 2019, very small. And it's not because there's not opportunities out there. It's just the market's different. Like trades are different. There's still plays every day. And I'm trading. I'm just trading with a lot smaller size than I originally was. So I guess that's the taking it easy. It's a lot more stressful, or a lot less stressful trading with the smaller size now. And I'll gear it back up, but I was pretty burnt out come like March, basically the whole month of March. I was just exhausted. So I didn't trade much that month.
Yeah.
Now here we are.
Yeah. Which is a favorite, I love what you did there. One of Steven's favorite quotes that he's brought to the podcast that I've stolen as well is, with trading, it's not what you make, it's what you keep. So I tell you that's so amazing. I love that you did that because, I mean, listen, you've still got enough in your account. You've got the skills you can, and especially if you margin up, you can hammer something, but it removes that temptation. And again, if it keeps you from getting crazy aggressive. And then, hey, things change. If things, which, I mean, listen, I'm hoping things stay a little slower for a few months, but if things come back in the fall, you wire back in and you get back after it. But I think a lot of people make that mistake where they have a lot of that success and then they just keep trying to hammer it when it's not there. And then all of a sudden they got too much size and the losses get bigger. And then all of a sudden, back to that quote, it's not what you make, it's what you keep. So,
well, Matthew, what do you attribute your wisdom to not hammer the market now? If you know that it's shifted, like how did you step into that kind of like acceptance is the way it is?
Yeah. I think it probably originally, like there's multiple steps probably just from over the years, but originally like I've seen people just blow up the money and I didn't want to be one of them. I was like, that'd be the worst thing to do in the world for sure. Yeah. Following that best month or best week ever in February, like the following week, I didn't lose a ton. I think I lost a couple $1,000s, but like from going just from that high to all of a sudden the next week losing money, I was like, man, like something definitely just changed. Like I don't feel any different, but like I'm just not making money. So that's when I started wiring out. Kim, I know I talked to you, I think almost a year ago. And we had like a little coaching call, which was huge. And like, I mean, you definitely helped me just like point in the right direction. I want to say like, I still was like, at that time grappling. I had a software engineering job offering, which I didn't end up taking. I went a different route, more in just the marketing space. But like if I would have taken that software engineering job, like my life would just be totally different. I probably would have still been able to work remote and trade a little bit, but the responsibilities like would not have been as flexible. Like it just, as a marketing role, like I can basically like I can trade when I want to trade and I can market when I want to market. And yeah, like I'll work weird hours but I'll work, 12, 14 hours a day. I don't really care because it doesn't really feel like work because I'm just enjoying it a lot more. And yeah, just at this point, just trying to, I'm not done. Don't count me out, everybody.
No way.
But we're just, we're taking a step back, like trying to let what happened over the last year happen because it was surreal to experience. And then we'll get back after it. Whenever the market shifts, like,
I talked to, I already mentioned a couple minutes ago, but I talked about it this morning on one of the webinars. It was like, 2020, I am like positive was the least amount of books I've read in my life. I'm like, I know it was like, many listeners know I'm an outside guy. 2020, without a doubt, was the least amount of time I spent outdoors. It's like, and again, like I know what you're saying there, Pete. As you're saying it, you're like, people are probably listening, thinking, Matt's retiring or something. It's like, no, it's like, God damn it, let's just take a little bit of a break. I mean, it's like, especially after 2020, it's just like fucking madness, man. So
what's your day, Matt, though? Because like, I think a lot of people think that they're grinding, right? A lot of people are like, put it on Twitter, and I used to be guilty of this as well. They're like, oh, I'm grinding. But I don't think people really understand what hard work actually is. So for someone who is a true bona fide, genuine grinder, can you describe the day that you would normally undergo?
Yeah, I'll describe my day like today, for example. It's a lot different than what it was, 2-3 months ago. 2-3 months ago, like come market open to market close, even after hours, I would not leave my trading screens. And then any work I had to do or whatever, I would just do after hours. Because like, I remember Bowen saying it, maybe it was pre-market prep or one of his webinars. He was like, it's like a bus stop. Every 5 minutes, there's another trade coming. And that's literally what it was for like 10 months straight. Like you could take a break and just catch the next bus, but like I wanted to catch all the buses. So like it was exhausting. But nowadays, so between trading and just the job I have, I got to balance my time a little bit and then also like relax in the evening. So I wake up pretty early, nothing crazy, like 5:45 and go to the gym because like that's basically my only option to go to the gym. So I go to the gym in the morning and then I head over to the office we have in downtown Austin. I'm in the podcast studio, which is really cool. So come check it out, everybody. But then I'll trade the open. I'm in the small cap rocket chat room and I always make sure to outline my watch list, which again is a lot smaller than it used to be, but like there's like 2 or 3 plays like that are definitely worth watching like every day for, we might get a squeeze or something. Yeah. So I'll trade for the first hour and a half. I'm on Central Time, so that's like 10 a.m. And then I'll just like take a break from my screens, chill a little bit. I'll do my marketing work. And then I'll come back. We have a Q&A hour at noon my time. So I'll answer any questions that anyone's got. Scan for the afternoon. I actually haven't scanned for this afternoon, but there was nothing crazy this morning. So I'm not super hopeful for that this afternoon. If there's something, I'll trade it just casually. And then just finish out just marketing work. I'll hang out. We have a ping pong table. I'm getting pretty good at it until market close. And then I'll usually head home roughly like 4 or 5 Central Time. And then just, nowadays I can get most of my job done during those hours because I'm just trading so much less. And then I'll take some time to like try to enjoy life a little bit. The weather is much, much nicer here in Austin than where I'm originally from in upstate New York. Yeah. So it's nice to be able to like go outside, before August or whatever it is in New York when summer finally comes.
Matthew, what do you think are the top 3 completely incorrect presumptions you had when you came into trading that you've now been like slapped across the face and woke up like, holy crap, that is so not true?
First one definitely would be, and I think everyone thinks this, and I mean, that's probably what draws a lot of people to trading is you can just get rich like overnight, basically. And I know like, if you just skim over and don't do a lot of research, it probably looks like I got rich overnight, and that's just not the case. And that's what it looks like to the outside, but it takes a lot of work. So that's the first one. And yeah, like I'm glad I got into trading because I was like, I can get rich super quickly. But then I quickly was like, whoa, like it doesn't work like that. And people still do it. Like the Dogecoin is the most latest
I think
example.
3 years is pretty freaking quick. Yep. But what it sounds like is you're saying it's not overnight and it's going to take a lot of hard work. But 3 years is still shorter than 50 for a company that maybe doesn't give you even a gold watch anymore.
True. No, that's a great perspective. Unfortunately, like the world we live in, people are just like, again, I'll go back to Dogecoin. They'll just throw their life savings into it and they'll be like, I can just like retire tomorrow. And like, it doesn't work that way. Maybe like a handful of people will make a ton of money on that, but most people are just going to lose because they're just going to think it's going to go to $1, which it probably, I don't know. Elon Musk keeps tweeting about it and he's sending it to the moon. So who knows? But like, it's just one of those things. Like you get caught holding the bag, you're going to lose money. And that's why people quit, because they just lose money too quickly.
Do you not think it's crazy though that someone will lose $200 on a trade and feel physically sick, but then they'll put $10,000 in Dogecoin and just expect it to work? Like, where's
Yeah.
the math in that though? Like, this is what I'm saying.
No, for real. I mean, honestly, like my perspective's even really thrown off. Like I can't go to a store and spend $100 or $200, but I'll risk 500 or 1,000 on a trade without even like a second thought. So
Yeah.
no, perspective's a weird thing. Let's see, the next one would probably be like I guess this could go a couple ways. Like that trading, like you need to be there like all the time, and that does help. But like you can just adjust your expectations and you can adjust your strategies. There's infinite ways to make money in the market. So whatever works for you. Like if you can only put in an hour or two a day, like that's fine. Just realize probably not going to figure it out for several years, like 5 years. And like, you just have to adjust those expectations. Now, if you're fortunate enough to put in the 8, 10, 12 hours a day, like that's going to speed it up. Maybe you'll get it in 2 or 3 years. Like that's possible. And if you don't, like everyone learns different speeds. So just like keep grinding at it. I don't remember where I was going with this. Basically, I was like, you can just trade. Like there's no one right way to do it, I think is what I was trying to get at. Like figure out what works for you, figure out what works for your schedule. You can swing trade. I've been trading crypto a lot and we can talk about that more later, but that opens a whole new door for people. There's no PDT rule. There's trading 24/7. That doesn't mean you should trade 24/7, but it's an option to you. You can trade on the weekends. And like what I've been seeing is just the liquidity and the number of players involved is to a point, and it's probably just going to get higher where like you can more or less actively trade crypto. I don't trade Dogecoin or any of those Shiba Inu coin or any of those stupid coins out there. I'm mostly sticking to like legitimate cryptocurrencies and then just trading the patterns. I don't really care what the coin or company does. It's the same attitude I have about penny stocks. Like I'm just looking to take a quick move on to the next. I think I owe you one more. Oh, go ahead, Steve.
Got a big question anyway. Sorry if I'm interrupting, but how much of the stock market trading skills that we've learned, trading stocks, how much of those technicals, because fundamental, I guess it's totally different, but how much of the technical skills transfer across?
A ton. The crypto market is probably closer, I'd say, to like the OTC market than like the NASDAQ market, just because of how it's set up. I know it's electronic, but like the whole decentralized factor, that stuff ends up trading closer to OTC stocks than NASDAQ. You'll get those really big, like euphoric supernovas as everyone's trying to get in and like the network's clogged up or whatever. And the same thing, like all it takes, it happens like once a week, if not more on Bitcoin still, like one big person to just sell and like Bitcoin will collapse 5-10% and then it'll recover over the next couple of days. But those type of like really quick volatile movements that are more so in OTC stocks. And then in terms of technicals, for me, it carries over very well. Basically I'm just a breakout buyer. Like if you want to just boil it down to as simple as it can possibly be, I look to buy breakouts in penny stocks and I look to buy breakouts over in crypto. So in terms of the technicals of the breakout, like it's pretty much the same. There's some caveats to it. I kind of think of like the easiest way to think of it is the Bitcoin is like the S&P 500. So when Bitcoins go down, your altcoins or other coins are going to be down. It's something to be aware of. I don't trade Bitcoin often just because the volatility on that's slowing up a little bit. It's just chopping around in this range. But when Bitcoin takes a pull or Bitcoin will break a resistance and go to new highs, you'll see a lot like more strength or weakness depending on what it is in the altcoins. So it's something to just keep an eye on.
And obviously we can go short for the short sellers. We can short these altcoins. We can go long these altcoins. And in terms of commissions and fees and structures, I know like it's been very easy to trade stocks recently. Is it the same case where it's commission free for these coins or?
No, it's not. And it depends on what exchange you have. I mostly use Coinbase and Coinbase Pro, but that's because where I live, both like whether I'm using my parents' address in New York or Texas, like you can't use Binance, and Binance is probably one of the better ones. It gives you just the most options, and the commissions are a lot lower. But unfortunately, I'm just in a situation where I really can't use them. And I know there's gonna be some comment like use a VPN or whatever. And I'm like, yeah, but for like my tax purposes, like
Right.
I'm in a bracket where I can't really do that. So, so therefore, I will not be using a VPN. So I use Coinbase and Coinbase Pro, and their commissions can be more expensive. Ways around that a little bit. Cryptocurrencies have these cool things where you can just convert from one coin to another instead of just straight up selling for cash. Obviously that comes with some difficulty because there needs to be a decent coin for you to flip your profits into, but you can avoid commissions for a long period of time just by converting from coin to coin rather than selling back to cash. So that's what I end up doing. And I mean, like my breakouts I've adopted kind of a different strategy there where I'll be like, my average hold time for a stock might be like an hour or two. I'm pretty quick. But like these cryptos, I'll just use smaller size because like they trade during the night and I don't want to take a huge loss while I'm sleeping. And that way I can hold it for a longer period of time for multiple days. I had one over the last weekend. The ticker was RLC was the coin. Again, I don't know what they do and I don't really care, but they just uplisted to the NASDAQ. That's funny. They just uplisted to Coinbase, which is huge because then for a lot of people, like it just opens up a huge door of liquidity for these.
Well, it's almost like it's funny you said uplisted in the NASDAQ, but it's almost like an OTC uplisting in the NASDAQ. Because I mean, still to this day, there's a lot of people that, you know, listen, Robinhood still doesn't allow OTCs. So it's like you get something like MMEDF or whatever, you know, this mushroom play that uplists to the NASDAQ. So now everybody's excited. You get the buyers. It's kind of the similar situation when it goes to Coinbase, because now you're reaching a whole nother marketplace, you know?
Absolutely. And that's like basically my mindset into it. So it was a Friday RLC uplisted, which I don't know if that was a coincidence, but basically every Friday you can pinpoint spikes in Bitcoin when like the market closes, and then the only game in town is cryptocurrency.
It's like 3-day weekends, holiday weekends. It's like go all in crypto on Friday night on a 3-day weekend, which I'm joking.
Exactly.
But I'm joking to a certain extent. Because especially if you're new, don't do that. But just watch crypto on 3-day holiday weekends, and it's like it's because all the degens are like, well, it's
Absolutely.
4 o'clock. It's 4 o'clock. What now? You know.
Yeah.
Last thing I want to do is like go outdoors or talk to my family. I'm going to trade some crypto.
Correct. No, that's literally exactly what happens. So I got just like a news alert that this crypto is uplisting RLC. I just quickly flipped over to Coinbase Pro, saw it, and I bought it like 420. I don't remember how many coins, but I threw like $30,000 into it. And then I was like, I'll just swing it for a couple of days. Usually these things get some absolutely wild spikes. And then I sold it a couple of times, but come Sunday morning, I'm sitting at brunch with my girlfriend and I just pull it up because I'm a degenerate. What do you do when you're at brunch on a Sunday? You trade crypto, right?
Exactly.
So I pull it up and it's at like $18 a coin. And I was like, what? I was like, get me out of this thing. Like, so I ended up buying at 4 and I sold some at like 11, 12 Saturday. And then it was at 18 come Sunday morning. And I think my best sell was like 1888. It peaked out around 20 and has since pulled back. So it was a really good time that I just looked at my device. But it was tough to fill. Like the liquidity was crazy. And it was just one of those euphoric moves that I was talking about because everyone was like, this is the next thing, blah, 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 whatever they think when they're buying these things. And I was just trying to get out of my position. And I ended up making like, I think it was 189% on my initial investment in like 2 days, which is just, the crypto space is the wild, wild west. It's crazy over there.
So that being said, and we got plenty more to talk about, but this would be a good point to talk about a project you're working on. One of the big reasons we got you on. So you got everybody excited. Everybody's going to be like, I want to buy something at 4 and sell it at 20 at brunch, but that being said, explain the project you're working on in the crypto space. And, we'll obviously give the link, but we'll link it in the podcast. We'll link it, et cetera. But talk about what you've been working on. So.
Yeah. So we'll link it. I actually just met up with Tim Sykes to record a little video for you guys explaining it. But me and Kyle Williams sat down and we are doing a live crypto trading boot camp. It should be a pretty unique perspective because Kyle's been involved in just the crypto space for a long time, since like basically, I think before the 2017 run. So
okay, cool.
Yeah. So he's got this mindset of like a hodler. Like he holds coins for the long run, and his trading style is like very different. He invests in every coin thinking it's going to go to zero, and then he'll get huge percent returns during these bull runs on the coins that work, which is drastically different than what I do. But he's had a ton of success doing that. I think Binance coin he owns from like $2 and it's over 600 right now, which is just I don't know what percent that is, but it's a lot. So that's his style. And then my style is just the more like day trading / like swing trading for a couple of days, these crypto breakouts, because that's where the momentum is. So it's 14 days live. We'll probably do a bonus Q&A day or two out there for the new members. So that is what we're doing. So yeah, like sign up and you can learn everything about crypto. On top of that, there will be just a newsletter service where you can see the trades I will actually be taking. Roughly, there's probably going to be like 1 a week, 2 a week is pretty much what I've been seeing in the crypto space, unless we go through, people are leaving penny stocks and going to crypto. So it's getting pretty wild over there.
I think it's a great time, again, obviously we're here to help you, get this project off the ground, but I mean, it's an interesting shift out there. But now, I mean, we see OTCs just going wild and stuff, but like when you think about like the NASDAQ penny stocks, I mean, there's not much going on right now. I mean, it's all these $5, $6, $10 ones. And I think that, it's going to be interesting. I definitely think listen, if you're interested in trading, you should be checking this out. You should be building your skills. And hey, maybe crypto goes away. I don't know, but it doesn't look like it's going anywhere anytime soon. And kind of back to Matt's point of when he was learning and then he's got the skill base and 2020 happens, I just think that cat's out of the bag and no matter
Who is
what.
this course for, Matthew? Like, would it be for somebody who doesn't understand crypto at all, or is it for more sophisticated players?
Yeah, great question. So that's why we included the boot camp with the newsletter service, because we'll take you like same way if you took the 30-day boot camp I did with Sykes. This one will take you if you've never traded crypto before, you have no idea what's going on. Like we start off pretty basic on the first couple of days, just explain what the space is, the players in the game, the brokers, that sort of thing to just introduce you to it. Kyle then goes through some more of the complex stuff that I don't really deal with, but again, if you're interested in like investing in these companies for the long term, like safety of crypto coins, which is a big thing, especially if you're trying to hold them for a long time, and just his strategy, the differences between like the technologies, and more just a fundamental approach. And then towards the end, we move more over just my style, which is like how I find these plays, the setups I'm looking for, and then when I'm in them, like how I manage my risk and then take profits. So like, if you're totally new to the space, the boot camp should be able to fill you in and get you up to speed. And then if you're more complex and you've been like holding coins for a long time, like Kyle, for example, I think there's a ton of opportunity in just like short-term days, couple day trading these crypto coins. Because like I was saying, like a lot of people are getting involved into it. And what's funny enough is, like when I was doing some research for this back in 2016, what like kind of started just the madness was Dogecoin. And I'm not saying it's going to happen again, but Dogecoin ran, when you look at the chart, it looks irrelevant now because it's run so much, but it was kind of the first crypto supernova. People had access to it. And then over the next year is then 2017, when we had just that incredible Bitcoin run to 20,000. And I think there's some parallels that can be drawn to what's happening this year. Like Dogecoin got a lot of people in the door into the crypto space that may have already been in stocks, but now they're looking at crypto. And we're seeing like I trade altcoins, but like there's kind of like shit coins is what people call them, which basically are just scams. But like people are like throwing money into them. They're basically playing like lottery tickets, and there's stories out there of people making $1 million on a super small investment. But again, for every one person who does that, there's thousands that lose. And that's not what I'm trying to do. I'm just trying to like use trading strategies that I've learned from penny stocks and apply them to the crypto market. And
it's a great idea. I'm so glad about the class. I probably want to participate because I want to understand it more. Very, very long time ago in New York, I had, it was probably when I was coaching for free outside the stock exchange. There was a small, like, empty space that was rented by Bitcoin. And there was this salesman in there. And, you know, I kept seeing him because I was out there every week. And he was like, I'm telling you, Bitcoin, I'm telling you. And to this day, I'm like, shit, I should have bought it back then. It was like, you know, 13, 14 years ago. But he kept trying to explain it to me. And we'd get interrupted by tourists, you know, who were visiting this space. It was like one of those spaces that didn't have a permanent tenant. So they were in there until they got a permanent tenant. It was, you know, a small space to the left of the stock exchange. And part of me was like, I think this guy might be crazy. And then I also was like, maybe he's crazy like a fox. And we kept having tourists interrupt us. So I never had the full thread. But anyway.
I'm thinking Kim met Satoshi right there. You think?
Yeah, you might have.
Do you think so? I think
it's a possibility.
What does Satoshi look like? I remember what he looked like.
Nobody knows. Only you tell us, Kim.
Only you know.
Only you know. Everyone else thought he was some crazy panhandler. You met Satoshi. So you need to tell us what he
was in an office. It was like an office space for events, like a gallery, almost like an art gallery. You know, not the best suit, I have to say, you know, which is probably why I was like, this guy legit. But the passion, man, the passion, that's what pulled me in. I was like, this
crazy people are always very passionate. So
yeah, it's true. But sometimes, sometimes those are the people that, you know, they're the ones.
The people who are crazy enough to believe that they can change the world are often the ones that do.
Sounds like a Steve Jobs quote.
Correct.
I just made it up right now. I don't think it's a Steve Jobs quote.
No, you stole that from Steve Jobs.
Oh, wow.
Mr. Calling as a philosopher.
So Matt, like, if someone wants to get into it, what can they do like now? Like what's a couple of tips, a couple of steps now before the bootcamp comes out?
Oh, good question.
Yeah, absolutely. I mean, first, like, start like just watching the crypto space. Bitcoinwisdom.io is the website. That one's pretty good. It doesn't have all the coins, but like it's pretty real-time chart. And if you're used to stock charts, like it's a pretty good chart to look at. And just familiarize yourself with like how it's trading. And try to, like, you know, I would encourage everyone to try to figure out patterns or whatever is working for them or whatever you're seeing. You don't have to trade it, but just trying to see how they trade is definitely important. And like I was saying, I think you should like kind of watch how, like, when Bitcoin pulls or Bitcoin spikes, what happens to the altcoins. Because that was a learning curve for me too. Like Bitcoin might pull back 2%, which doesn't seem like anything. But then, like, if you're in altcoins at the wrong time, that might be a 20, 30, 40% pullback because the moves are just so drastic compared to like Bitcoin. I don't know if it's algorithms or people panicking. Doesn't really matter, but the moves are crazy. So that'd be my first tip. I do some research on like crypto brokers for the US. There's a lot of restrictions. It's pretty tough. Like for you, Steven, you can probably pretty much sign up anywhere. But for US people, Binance is a pretty good one. The fees are manageable. Another one's Gemini. That's the Winklevoss twins. They own that one. That one's pretty good too. Pretty comparable to Coinbase. Coinbase is probably like the easiest one to sign up with. But again, like you use that one, the fees are going to be a little bit higher. But in terms of getting started, like super basic. And
safe. Well, and hopefully safe.
Safe.
I mean,
yeah,
that's a nice thing, you know, and that's what I tell most people is, you know, especially if you're just kind of getting to know things and figuring things out. I mean, it's a lot like getting started on stocks. Don't fixate on the fees. I mean, it's like, listen, you got to figure out how to trade first. Okay. Yeah. I know it sucks to look at your statement and be like, but you know, at least Coinbase is safe. You can kind of figure things out, you know, hopefully they're safe and not going to shut down in the middle of the night. But ultimately, whether it be stocks or crypto, you got enough to learn. I think people get so distracted by fees. It's like, man, you just learn how to trade first. You know, exactly. Penny wise and pound foolish. Yeah. So
because you don't want to have to be figuring out all that other stuff. Just they're charging you so you can have it simplified.
Yeah, and I get, because I get those questions all the time, and it's like people people are clueless, but they're asking all these questions about fees, and I'm like, man, you're spending all your time on this. I do a Q&A, and you want to ask about, maybe ask about, how to, what is float? What's a chart pattern? What how do you, break down why are you taking this time to fixate on? Anyway, I get a little ranty on that. It's like,
all right, so here's a question for all three of you guys. Mara, why was it that I took Mara over that swing trade, that was going to go up because Bitcoin was going up?
So you're number one, you're going back a little bit. This is a couple months ago. So, basically historically, now they have started to disconnect because everybody's tired of the crypto stocks, just like they're tired of weed stocks. But historically, up until recently, because Mara is a stock, remember that they're a company. Okay. Right. They're not a cryptocurrency.
Right.
But in the past, again, up until recently, whenever the cryptos would run, particularly Bitcoin, the crypto related stocks would run. So when we were doing that on podcast and we were talking about Mara, that was when Bitcoin was, when it was first pushing like 50, 60,000 going back a couple months.
What is crypto related?
So that is a company, a stock that's in the crypto space. So they're doing mining, etc. Like Riot, Mara are two of the main ones. When you're talking a cryptocurrency, okay, this is magic money, okay, decentralized. Nobody owns it, nobody regulates it. It's all in the cloud, basically.
It's in the ether,
and it's all magical. And you just hope that they don't steal all your money in the night.
Just a step away from crypto, Matt, because I think you're the best person to answer this question. So, I think you're known as a great breakout buyer. You are a great breakout buyer. One of the best I've seen when I see your charts. OCGN wasn't a breakout, but it was just the sickest read. But I just wanted to ask you, a lot of breakouts don't work, and a lot of people try and buy breakouts in the lose, right? So what is it that you're doing differently that makes you such a good breakout buyer?
Sure. Yeah. A couple things. First, probably how I define a breakout. A lot of the times, people have this conception they have to buy it like over highs, like over like a former high. And for me, it's more important like how it got to those highs, maybe some key levels around those highs. This honestly dates back to, I think Roland did a webinar, or maybe it's one of his YouTube videos. He was talking about this, where you can look at like a 5-minute chart and like, who cares really if a stock has a morning spike and trades at, we'll call it $5 for like 10 seconds. And there's really not that much volume up there. Where if like $4.50, it's clearly at a resistance level for like several hours. It topped out there maybe 3 or 4 times. For me, the breakout then is at $4.50. It's not at $5. So a lot of the times right off the bat, my entry will be maybe around $4.50, and these breakout buyers will be buying at $5. So I'm already up over 10% on my initial position because I bought over what I would consider a more significant level. So that's probably step one. Step two, something I got really good at and why I was, I think, able to lock in some just like really big gains over the last couple of months was anticipating breakouts and then like sizing into them. And granted, like your win rate is probably going to go down if you do this. But what I would do is like, we'll call it an ABCD pattern because it's basically the same thing, just series of higher lows grinding back up to that breakout. Usually after the first couple, if it has a morning spike and then consolidates a little bit and then it's got some series of higher lows through that midday, I'll be there on every single dip, just like risking the previous dip. And it's pretty aggressive strategy to do, and the market needs to be in your favor. Doesn't work great now. I'm a little like wider risk, but doing that, consistently adding on those dips and assuming the lows are continuously higher, you can keep like the same dollar amount risk. And then all of a sudden your size is 4, 5, 6 times larger than if you were to buy at the breakout, or maybe you just bought that first dip. And again, your win, like I think my win rate dropped doing this from like 65% to maybe like 50. But when I got a winner, it was like 10 times larger than like what I would have done. And it can be stressful because also like if you glance at your position size and you're like, holy crap, like I'm holding 100,000 shares of this stock. Like that's scary, but you have to go in with the mindset, like, no, like I'm moving up my risk. I'm cutting at this level if it's wrong. And like I'm saying a couple of times, you could get shaken out, and like I do get shaken out, but when breakouts are working and it's in your favor, what could be like, $1,000 win will all of a sudden turn into a $7,000, $8,000, $9,000, $10,000 win, because you were able to size into the play correctly. And also going into that, like if the breakout fails, your risk like is pretty tight and like pretty uniform. One quote that really stuck with me over the years was from Huddy. I'm mentioning a lot of people, which I think is another point, is like learn from everyone.
It takes a village. It takes a village.
Like take notes from everyone. No one's right. Even if you're long bias trader, learn from the short sellers, because like a lot of my trades these days, I'm like, man, if I was a short seller, I would be in trouble if I was in this position. So then I go long instead. And like more times than not, it works. But the quote was, Huddy said it, and it was like, in order to be a consistent winner, you need to be a consistent loser.
Yep.
Which is huge. And the way he meant that was, if your loss that you've determined is good for you is $100, that means every loss should be $100, give or take a couple bucks for slippage or fees or whatever. But that doesn't mean you should have a $500 loser thrown in the bunch, because once you start doing that, it is very hard to be profitable, because that one loser will like wipe out so many gains. And I broke down this mathematically at some point, but like, say you're risking $100 and you're trying to just baseline win 3 times more than you're risking. It only takes 25% win rate to be break even, which means like you have 3 losers that are $100. You just lost $300.
That's my rule of 5. You stole it from me, man.
Yeah, and then it takes a village, man. And then you have the one winner, which is $300. You've only won 1 trade. You lost 3 and you're break even. Yeah. And that's really what it comes down to. And then after that, like if you want to get really complicated, your choices are like how to be profitable. You can either increase your win rate, or increase your risk reward. Like instead of 3-to-1, it's 5-to-1. And that's different for each strategy. Like, there's nothing wrong with a 25% win rate if your winners are 20-to-1. Like it really doesn't matter.
That's short selling 101, man.
Why does that
you have a terrible win rate, but as long as your one win is 1,000 times bigger than your losses, you're good to go.
I'm not even a good trader. I just haven't been found out yet. Haven't took that big loss yet. I shouldn't joke on that. Touch wood.
Yeah, exactly. Yeah.
What's that
risk
win
reward
rate?
is on point.
Why do you think there's so much focus on the win rate?
Ego.
Well, and people don't like to lose.
Yeah, people like winning money. Yeah, people love making money every day. Like, who wants to lose?
It really sucks.
But Kim, that's your specialty.
Yeah.
It's like, I mean, people, again, you don't need a crazy win rate, but people want a crazy win rate, especially newer. Like back to Huddy's quote. You gotta be good at losing. Because if you're not good at losing, it doesn't work anymore. And if your ego, won't let you and you fixate on, well, I don't want to lose. Well, good luck.
But to a degree, it's unhealthy, because like, say if you win 6 out of 6 trades, you post that straight on Twitter, that screenshot, 6 out of 6, all green, you get a little bit turned on by the attention, right? But what you're actually doing is a little bit unhealthy, because if you're forcing a trade outside of the risk reward just to get that 6 out of 6, not the 5 out of 6, you're actually not trading that well. And once that discipline starts to slip, you force it a little bit more with the risk reward, then a little bit more, then something out of control happens and you take that bad loss that wipes out 10 good trades. It should have wiped out like 1.
Yep.
Yep. It's the measuring stick. It's the measuring stick you choose to measure yourself by. And if you choose that one, you're not going to be setting yourself up for success.
So I mean, what do you measure yourself against? It's like, sorry, Matt, this is your show. I'm sorry. I'm just a little villager. You're the king of the village. Please.
What do you measure yourself against? Is that the question? I mean, like,
well, this concept of the win rate being ego driven. So what do you use as your measuring stick around yourself? Like checking in on yourself, make sure your ego's not out of control.
Yeah, I never focused on win rate, and for a long time, like I didn't focus on money, even though like, I mean, the sad reality is that at the end of the day, money is the ultimate leaderboard. But money's different for everyone. It depends where you are, it depends what you want in life. So for me, yeah, like I don't look at money now, because then I'd look at someone like Jack, and I had a great year, and then Jack Kellogg like 5 times me, and I was like, okay, cool, bro. Like, thanks for that. So I think it's just you gotta focus on, like, if you're new, the best thing to do is just like your process, and like, did you follow your trading rules? That's the best thing. And like, you can kind of, like, I hate to say this, but you can kind of earn out of that. But then like, if you get too sloppy, you're just gonna you're gonna ruin it. But when you're first starting, you have like no margin of error. You need to stick to that trading plan every single time. And that's really what you should be measuring against. And circling back to win rate, one good thing about like Profitly on there and all the stats they have is you can look at people's win rates, and then you can flip through. I was doing this the other day, just looking at some other traders. I think Mark Crook's win rate's like 51% or something. Like, it's like super low, but like, why does it matter? Like his winners are much, much bigger than his losers, and he's crushed it. He had a great year too. But like the average, like if you want to look at the average, like millionaire trader on there, it's like 60 to 65%, like is the average win rate. Like, so it really doesn't matter. It's tough when you're on Twitter and just involved in the social media, because like Steven was saying, someone can post that 6 out of 6 win, and then you're like, or someone can post a huge gain, but like, you don't know the backstory, and then you get down on yourself. So easier said than done, but you need to like figure out how to internalize it, and figure out who you want to follow, who you want to learn from. But really, you have to figure out a measurement that's just like internal, that can keep you going and keep you interested and passionate and in the game. Yeah, that's basically what I got there.
Well, hey, Matt, thank you. And you know, to everyone out there, you know, I think definitely check out this boot camp by Matt and Kyle. They're both amazing traders. Very, again, 2 of those young guys, very inspirational. And, you know, I think you should always be, you know, working on that toolbox. And listen, I've been very, ever since the resurgence of crypto kind of in 2020, I've been saying the same thing. I mean, you need to figure out this space, because I think both are going to stay. You know, I don't think stocks are going anywhere anytime soon, but this is definitely a tool in your tool chest. And listen, maybe you're in a different time zone, or, you know, maybe you got a job where maybe you get some great job, but it's a, you know, 9 to 5, and the boss is like, you ain't trading. At least with crypto, you've got some options out there. And ultimately it's you know, like Matt said, it's all the same psychology. I mean, it's like, you just want to be buying when everybody wants in, and then you're selling, you know, you get those consistent rips. You're not greedy. You're not a hodler. You know, you're not waiting for 420.69 on Doge. You know, it's like you get a nice move. You get a 4 to 18 move over a weekend. I mean, Matt, you know, again, at no point during the podcast did you hear Matt say, well, you know, I thought about holding for 50. He's like, geez, this thing went from 4 to 18 in a day and a half, taking profits. And that's what we do in penny stocks. It's, you know, it's like, we know what these things are. You get a nice move, you take it, and you just look to repeat that over and over again. So thanks, Matt. Thanks, Kim. Thanks, Steven. And as always, head over to SteadyTrade.com. We'll link to the boot camp. You know, we'll link to Matt's other resources. You can check out everything. But if anything we mentioned will be linked there, we'll link it on the YouTube as well. But SteadyTrade.com is always the best place to get all those. We got the little write-up under each post. Thank you, Kim. Thank you, Stephen. Thank
Can
you,
we
Matt.
say goodbye to Ella?
yeah.
Ella left. I had someone
Oh,
come in and
too
take her.
bad.
Yeah, she snores a lot when she sleeps, so I didn't want to interrupt the audio.
Too bad. Too bad. We'll have to have, maybe Ella will come on as a guest.
Okay, we can have a little guest appearance coming up. That's fine. I can do that. But
All
thank
right.
you for having me on. It was a pleasure, everybody.
Thanks, guys.
Nice to chat with you in person.